Well, as the market was fighting to recoup losses, hashtag buy the dip was actually trending on Twitter. So we thought we'd ask the chart master what names might be worth buying on the dip. Let's bring in Cornerstone Macro's Carter Worth to chart it out. Carter, what are you looking at?
Well, certainly we just found out that the most important and biggest holder of Tesla did just that. In any event, clearly that very popular thing on Twitter indeed is what happened today. And I thought we'd look at a few charts on the market, and then I've got a couple stocks where I think the weakness is an opportunity versus a problem. So just first, a slide. We've had 7 dips, if you will, since the March low. Right, the median and mean almost the same. Again, 7.2% median decline, 7.07% average decline. So here is a chart. These are the dips. You can see them there. They've been quite regular. And again, whether one calls it a dip or a correction or a pullback or a sell-off or a decline, in the etymology of correction, it implies that it makes it better. Something's incorrect, how steep it's ascending. And when you correct, it allows you then to ascend again. So you see these very distinct drawdowns, if you will. But this last one is quite minor, right? The others, as much as 10%, that September-October sell-off. All the others, 5, 6, 7. And again, median and mean 7. This is only 3.7% peak decline. So our hunch is that there's more to go. How much more to go? Well, next slide. One thing to do is to draw your trend lines. And so were we simply to get down to the trend line, in effect, since the pandemic low and the low of October, that would take us down about 5.5%, 6% peak to trough. And again, we're down only 3.7 as of now, peak to trough. Last chart and then a table. This one is another way to draw the lines. It's the same ascending uptrend, but then it's the internal trend line on the top. And what's important about this, it's a well-known formation. It's an ascending wedge, if you will. They often are resolved poorly, which is an exhaustive type thing, and you come out through the bottom. I think that's what we're looking at least to the trend line, if not more. Now, last slide. Some marquee names that I think are opportunities, meaning the weakness in them is an opportunity. So just a simple table there. These Apple, Amazon, even DocuSign, stocks that are still well off as of today's close from their 52-week high, versus, of course, the S&P. It's down only 1.8% from its 52-week high, all-time high. I'd rather take advantage of some of these that are, quote, mature, DocuSign being the exception, tech and or growth names, rather than some of the high flyers that have really gotten walloped.
So I take it, Carter, that your technical take on Cathie Wood's buy of Tesla is that there will be more losses to come in this name.
Well, in terms of Tesla, remember this, what was it, about a 34% decline, and it's taken place over 4 weeks. If you remember the September 2nd peak and trough, that was 30+%, took place in 4 days. This sell-off is nowhere near that. But I think that her buying at those lows or wherever she bought, that should put in the low for a while.
All right. Carter, thank you. Carter Braxton Worth of Cornerstone Macro. Steve Grasso, you like any of those names on Carter's list?
I do, but the problem that I'm having with it is that I don't want to get caught up in this buy the dip routine in technology. So a name that we mentioned at the top of the show, an Apple, it's RSI. We know that oversold is a 30 on an RSI. It got down to 35. None of those other names are gauging or reading on an oversold basis. So the only one I would feel comfortable in the tech world buying is Apple, and I am long it.
Yeah. Tim?
Amazon. I mean, look at that chart. To me, for Amazon, you know, this is a quiet Amazon consolidation between 32 and 3,500, and this has been going on for 9 months. We just got reaffirmation, maybe slightly slower growth on AWS, but their e-commerce business at a time, this is a driver for every other retailer, continues to take market share. So I like Amazon here, and this is a case where I hold my nose on valuation. I finally came around to that, probably 4 years too late. But certainly have understood that for the last couple, and I like the stock here.
All right, let's get to the latest development in the GameStop saga. Check out shares right now. They are down by almost 5% in the after hours after announcing a major management change. Josh Lipton joins us with the details. Josh.
So, Melissa, we do have some changes in GameStop's C-suite here. They're saying that Jim Bell, Executive Vice President and CFO, is going to be resigning from his roles on March 26th. Company saying here, thanks, Mr. Bell, for his significant contributions and leadership, including his efforts, they say, over the past year during the COVID-19 pandemic. He was appointed CFO, by the way, in June 2019. Company says it's initiated a search for a permanent CFO. If a permanent replacement, they say, is not in place at the time of his departure, then it will appoint the current SVP and Chief Accounting Officer as interim CFO. That stock hit an all-time high in late January. It's down about 90% since then, but still up about 220% over the past 3 months and up about 1,700% since its April low. Melissa, back to you.
Josh, thank you. Josh Lipton. Unbelievable that its high was 10 times where it is trading right now, more than 10 times where it's trading right now. Karen, it's never a good sign when you see a CFO resigning. I'm just curious what your take. There's not a lot, granted, we don't know about the situation.
Yeah, there is a lot. I mean, the number one question I would have of the CFO is, did you try to do any kind of offering? And if not, why not? Other than that, I don't know. The guy must exhaustion, something. I don't know. It's a crazy ride. And you sit down 90% on no fundamental news whatsoever. So that's pretty extraordinary. But that question I really want answered someday.
Mm-hmm. It is still up a multiple of where it was pre-GameStop frenzy, though, Guy, which is also remarkable in and of itself.
Yeah, and if they don't fill the role, maybe they can get the Goodnight Kitty guy to come in. He could probably do it extraordinarily well because he seems to know more about GameStop than 99% of the people out there. And I'm with Karen on this one. The number one question is, I don't know if we've heard from GameStop. Maybe we have. Maybe I've been under a rock somewhere. But where were they? I mean, where were they? A lot of other companies did secondaries on huge moves to the upside. Where were they? Maybe they couldn't do it, but at least come out and say something. The stock gave you an ample opportunity, my sense is, to get something done, and paralysis by analysis, as they say in our business, is never a good thing. So I'm sure Mr. Bell is a nice guy, but he should have rung the bell north of 300 as we sit here today.
Even if they missed the highs and they, filed for an offering and they filed at, 50, that would still be a tremendous improvement from where the stock was trading in the fall, Steve Grasso, or in December. I mean, it was still a great opportunity to raise more capital than they thought they could raise just a few months ago.
Yeah, I think that's probably why he's leaving. So all the questions that we have, that's probably the crux of it is that somebody tapped him on the shoulder and said, did you go away for a couple of weeks? Why were you asleep at the switch? But I think we all knew on this desk how this was going to end, and the chart reflects that. But yes, I agree. They could have changed a lot by raising some capital. He didn't do it, and I think that's why he's butting elbows out the door.
Did you catch the gaming reference? Falling asleep at the switch, Tim?
Yeah. Well, I mean,
I didn't really even know that.
The fact that the stock's down 5% in the after hours on what would be fundamental is ridiculous. And so, whether you appoint Hello Kitty or Kitty Carlisle into the C-suite, it doesn't matter. And I think you got a case here where it's just amazing to me that the stock reacts to fundamentals in the aftermarket when, in fact, this has nothing to do with fundamentals.
All right.
Shepard Smith here. Thanks for watching CNBC on YouTube.